Good evening. This is Tom Alexander. This is the weekend update that I publish every week. Today is Saturday, August 10th, and this will be for the week of August 12th. If you are new finding me, you can find all my reports at alexandertrading.com. They're free. Let me show you this. By the way, if you find value in this, it would be a huge help if you would like it. If you would subscribe to the channel, it helps me grow the channel. I very much appreciate that. Okay, let me show you. This is the website, alexandertrading.com. The weekly updates are free. You can click on weekly update, and this is actually the material that I'm going to go through here. But you have a PDF that will give you all the levels, if you want to print out the PDF and the verbiage, etc. You can also go back and you can look going back farther than you probably care to go. You can see what I was saying at a given point in time under a specific market condition and see if you think I know what I'm talking about consistently. Best way to take a look at it is right here. Okay, let's take a look at last week. Last week was quite interesting. Okay, obviously we had sort of a mini crash from last Thursday. On Thursday, we had the big reversal. Then we gapped down on Friday. Then we gapped down, had a huge gap down on Monday. And then we had a furious rally. Now, in last weekend's report, I suggested just this scenario, and it pretty much played out as I thought it might. Now, going forward, this is what we could see. We could see some sort of development in here where the market fills out. If you sort of visualize the Gaussian shape of a market profile, we could stay in this range. The upper level to keep an eye on next week is this gap area up here. We're really sort of bumping up against it as of the Friday high. But I would be a little bit surprised if we just go ripping straight back up for the next 2 or 3 days without some sort of retracement into this range. Now, to the downside, this 52.15, 51.87 area right here is important. So we'll see. But to me, the levels are pretty well defined. Something else that I think is very important at this point in time that I think we all need to make note of is that the correlations among the indices have returned. Everything was in lockstep last week to the downside. Everything was in lockstep back on the recovery. Now the question is, are we in a bull market or we're in a bear market? I don't know, and I don't see how anyone can answer that question. I think I'm giving the benefit of the doubt to a bull market. This market went almost straight up from last October's lows with very little retracement. And I'm sure you all have seen all the statistics about typical retracements in bull trends, and this retracement in the primary U.S. indices fits within normal retracements in a bull trend. Now, can you say it was overdue for something like this? Yeah, absolutely. We've also had this rebalancing away from the 7 stocks that drove this thing relentlessly higher into that top. And I think that's why the correlations have returned now. There's more emphasis on more stocks across a broader spectrum. And I think that will be helpful from an analysis and a trading perspective going forward. So this is the SPX. Let's take a look at, I'll drag over the index. And as you might expect, the index is in the same relative position as is the SPX. They're all the ones I'm going to show you, the 4 or 5 I'm going to show you are all in the same structural perspective from a price action perspective. So this is the index. Let's pull over the Dow. Same, we get the same pattern off of we had the Wednesday collapse that carried into last Monday, or the carried into last Monday. Then the bungee jump that began last week on Monday at the bottom tick. And then that's the Dow. We'll look at the Russell. Same situation, the Russell. Now the Russell took this level out. The Russell to me was the index that was confirming the bull market. And I talked about this in previous reports. And again, you can go to the website and see what I was saying 2 or 3 weeks ago about the Russell and why it was important that it broke above and was making new yearly highs. Well, that's been negated now. So we're back into this area of chop and churn that the Russell has been in for an interminably long period of time. And it also brings into question once again, is the broader market as represented, for instance, by the Russell, going to begin to participate in this next leg up, assuming we're still in the bull market. And then the broadest index, the New York Composite, actually acted very, very well. Now, the New York Composite is the largest index we follow. It's all the stocks listed on NYSE, and it has retraced more than half of the decline off of its high from a week ago. Okay, I'm going to leave you with one last thing here, and I think this is also important. VIX, as I'm sure you are all aware, VIX spiked to a level that we had not seen in quite some time. It spiked up here to 60 plus. Now, I don't know what the exact print was. And depending on the pardon me, I have a cold. Depending on the software program you use, your data provider, this could be off, but that's really immaterial. This was the spike on Monday. You had this incredible, huge spike from the previous close on that Friday. And then we closed. VIX actually began to decline on Monday. And this was the close this Friday. So breadth has contracted. Breadth is based, I'm not breadth. Volatility, VIX, is basically collapsed. This is a net positive. Now, could this turn right back around and go back up? Yes. When VIX gets above 30, you want to be paying attention because your major mini crashes like we saw last week are going to occur, almost always occur. I don't know of an instance when one didn't, but they will almost always occur when VIX is above this 30 level. So when VIX gets above 30, you want to be paying attention to price action and to the structure of the market and what's creating that. Because above 30, typically the market is in big time crater mode. This could be marking the low of a significant correction within this bull trend. Now, are we going to go straight back up? I doubt it. Let me pull this back over here. All right, this is the SPX. And the path that we could take here, I'm going to get rid of this just for fun. The path we take here, we could go up and it's pointless to try to predict coming off of this spike low, the path the market will take. I don't think it's going to go straight back up. We could very easily trade somewhere, up in here and maybe form some sort of balance from here. We could form balance first down to here and chop around. So the path here of development is going to be interesting. We're certainly in an interesting time with all the things going on in the Middle East, not to mention the U.S. presidential election. So there could be some surprises. And I'm also very, very interested to see how VIX begins to behave. Let's pull VIX back in here one more time. So VIX, as you can see, hovered. I mean, it was around historic lows for VIX. It was around 12 or so. And then we started to get a little more volatility in the market. Then we had the big spike up. Well, it's possible that last week's event is going to set a new floor, a higher floor. So maybe VIX continues to drop, but it settles out around here, or it settles out around here, I'm going to be surprised if we see VIX down here in the low teens in this area anytime soon again. If it happens, well, we'll see. Hope you guys enjoy this. Hope you found value in it. And again, I would very much appreciate it if you would like, subscribe to the channel, make comments. I'm happy to respond. You guys enjoy the rest of your weekend. I'll speak with you again soon.